We got lots of housing data out today. Building permits continue to rise, but housing starts trending down for the first time in 4 months. Builder sentiment keeps surging, but not necessarily when it comes to single-family housing.
If you intend to be an owner of a house in 2024, join me as I reveal what the year ahead holds for home buyers, sellers, and those curious about the interactions of factors shaping the real estate market. Key indicators suggest a shifting landscape as potential homebuyers keep their fingers crossed for a return to normalcy. This is why I intend to look closer through the highs and lows, unveiling insights from industry experts and market data. Housing market forecast for 2024.
I think we're heading towards a housing renaissance. I think 2024 is shaping up to be that pivot year where we leave the doldrums of kind of the post-COVID slowdown, and we really pivot into the next 5 or 6 years in the housing market.
In the aftermath of a challenging 2023, many prospective homebuyers are eager for a more optimistic 2024. As predicted by industry experts, the forecast presents a mixed bag of challenges and potential opportunities. Chief economist at First American Financial Corporation, Mark Fleming, anticipates a flat stretch for the housing market. Reflecting on the 2020 to 2021 housing boom extremes and the subsequent cooldown in 2023, Fleming suggests that 2024 will still need to find the perfect balance. However, there's a glimmer of hope as mortgage rates show signs of easing. According to Jim Tobin, CEO of the National Association of Home Builders, we are heading towards a housing renaissance. The average 30-year fixed-rate mortgage stands at 6.69% for the week ending January 25. Despite the decline from the highs of 2023, this rate still lingers in the high range, posing a challenge for potential homebuyers. Economists express optimism about the Federal Reserve's approach to control inflation. After keeping the federal funds rate unchanged in December, there's hope that the Fed's rate hiking campaign may end. However, Keith Gumminger, vice president of mortgage website hsH.com, emphasizes that a delicate balance must be struck for a meaningful housing market recovery. Gumminger suggests that a considerable increase in inventories of homes for sale is crucial. This increase could alleviate the upward pressure on home prices, making homeownership more attainable, especially for first-time buyers. Gumminger also notes the importance of interest rates cooling off but cautions against rapid reductions. A measured pace of rate reductions would provide incremental improvements for buyers over time, preventing a sudden surge in demand that could offset inventory gains. Looking ahead, Gumminger proposes that mortgage rates returning to a more normal upper 4% to lower 5% range would aid in bringing the housing market back to the levels observed between 2014 and 2019. Yet he acknowledges that reaching those rates might take some time. While these projections hint at potential relief, housing inventory remains critical. Rick Sharga, founder and CEO of C.J. Patrick Company, emphasizes that a significant increase in existing homes for sale may materialize once mortgage rates dip back into the low 5% range, a development unlikely to occur in 2024. Amidst the challenges, there is still hope in the form of a rebound in home builder sentiment. The National Association of Home Builders Wells Fargo Housing Market Index rose from 34 to 37 in December, indicating a more positive outlook among builders. New single-family building permits increased slightly in November, marking the 10th consecutive monthly rise. Will mortgage originations remain low through 2024?
The world is getting ready to realize that we're no longer going to back those 3 and 4% mortgage rates. And there does need to be a generational shift here.
The mortgage originations landscape shows signs of change as we move through 2024. Eye-catching mortgage rates in recent years led to a decline in mortgage applications, but the good news is that rates have started to recede in recent weeks. The Mortgage Bankers Association sees this as a turning point, predicting an increase in total mortgage origination volume from an anticipated $1.64 trillion in 2023 to $1.95 trillion in 2024. The anticipation is fueled by the expectation of rates drifting down to near 6% by the end of the year. According to Jim, mortgage rates in the 5% for the long term are still really good low rates for a long-term investment like your home.
So I think people are going to recognize that. Again, 6 might not be quite the number they're looking for, but they're going to start moving off those sidelines.
Fannie Mae also joins the optimistic chorus, expecting mortgage activity to trend upwards. Their recent report indicates a slow but meaningful recovery in single-family mortgage originations in 2024. This shift in the mortgage origination landscape aligns with decreasing mortgage rates. Over the past few months, mortgage rates have declined by over a full percentage point, offering potential homebuyers more favorable conditions. Housing inventory forecast for 2024. The availability of homes for sale, known as housing inventory, plays a crucial role in shaping the real estate market. As we look into 2024, the forecast for housing inventory presents a mix of challenges and glimmers of hope. Rick Sharga, founder and CEO of C.J. Patrick Company, points out a notable issue: the limited supply of existing homes, especially those suitable for first-time buyers. This scarcity has been a driving force behind the sustained high home prices, making it challenging for many to enter the market. However, there are signs of optimism on the horizon. The outlook for home builders, as measured by the National Association of Home Builders, Wells Fargo Housing Market Index, is rising. Builder sentiment increased from 34 to 37 in December, indicating a more positive outlook.
The NHB Wells Fargo Housing Market Index, which came out yesterday, the biggest jump in that component, we moved up 7 points in total, but the
new single-family building permits also saw a slight uptick in November, marking the 10th consecutive monthly increase. These indicators suggest home builders are gearing up for increased construction, potentially adding to the housing supply. Yet, challenges persist. Many homeowners, enjoying low interest rates or hesitating to sell due to high home prices, are holding onto their properties. This phenomenon, known as being locked in, contributes to a continued demand-supply imbalance. Sharga believes that a meaningful increase in existing homes for sale might only happen once mortgage rates dip back into the low 5% range, a development unlikely to occur in 2024. The intricacies of local governments, their control over land use, development processes, and permitting timelines also contribute to the complexity of the housing inventory scenario. Affordability.
And Jim, let's talk about affordability, though, as an issue. Now, I'm looking at the 30-year fixed here, Jim. According to Mortgage News Daily, says it's now at 6.89%. I mean,
for many aspiring homeowners, 2024 brings limited hope for increased affordability in the housing market. Challenges persist, making the dream of owning a home seem distant for some. Zillow reports a substantial 40% increase in home prices compared to February 2020, setting a challenging backdrop for potential buyers.
Impact demand, Jim, and where do you see that headed from here? Where are we in 6 months?
I think in 6 months, we're going to see mortgage rates even lower than we are now.
The third quarter of 2023 witnessed home prices growing in over 80% of U.S. metro areas year over year, according to the National Association of Realtors. According to Mortgage News Daily, 30-year FARM is currently at 6.89%, better than 8% but still higher than most people can afford. According to Jim Tobin, mortgage rates will go even lower in 6 months. The Fannie Mae Home Purchase Sentiment Index reveals that 86% of consumers need to postpone home buying plans. Doug Duncan, Senior Vice President and Chief Economist at Fannie Mae, notes persistent consumer pessimism about the housing market's state. Even if mortgage rates decline in the coming year, the HPSI suggests it may not significantly impact affordability. NAR's First-Time Homebuyer Affordability Index paints a challenging picture, with a preliminary third-quarter reading of 61.9 compared to 65.4 in the second quarter. This index, below the 100 mark, indicates that many families earning a median income might struggle to qualify for a mortgage and afford a typical home. Adding to the affordability woes, a Redfin report highlights the median monthly housing payment reaching an all-time high of $2,715 in 2023, marking a 12.6% increase from 2022. This, coupled with lenders advising that monthly mortgage payments stay below 30% of pre-tax income, intensifies the struggle for potential buyers. Will the housing market crash in 2024? According to some experts, the prospect of a housing market crash in 2024 remains low amidst uncertainties. Comparisons to the 2008 financial crisis suggest a more secure foundation for today's homeowners. Orphe Devanwy, senior macroeconomist at Zillow Home Loans, anticipates a step back in home appreciation in 2024, but not a significant plummet. Despite mortgage rates reaching heights unseen in decades, competition for houses has proven resilient. Devanwy identifies factors like millennials entering prime home buying years, wage growth, and financial wealth as tailwinds sustaining housing demand in 2024. This optimistic outlook is shared by many experts who predict that, despite potential price declines in specific areas, a nationwide market crash is unlikely. However, a price collapse is possible in certain markets, particularly where real estate investors are heavily invested. It emphasizes that such an outcome would require specific triggers. Rob Barber, CEO of property data provider Atom, highlights the concerning picture painted by foreclosure filings. While foreclosure activity has increased, it remains below pre-pandemic levels. Economic stability, steady wage growth, and substantial homeowner equity have played pivotal roles in keeping foreclosures in check. Should I wait to buy a home?
I think now's the time to get out and look at a new home. As the existing market, which is traditionally where first-time home buyers look at an existing home.
The question of whether to wait to buy a home could be clearer amidst evolving market conditions. Orphe Devanwy, senior macroeconomist at Zillow Home Loans, emphasizes that timing the housing market is challenging. He suggests the best time for prospective buyers is to find a home that meets their family's needs, aligns with their budget, and suits their long-term plans. Jim also advises, for first-time home buyers in particular, there are government programs. Keith Gumminger, vice president of mortgage website hsh.com, echoes this sentiment, emphasizing the difficulty of timing the housing market. Gumminger suggests that waiting for better conditions may only sometimes be advantageous, as home prices tend to keep rising and the goalposts for accumulating a down payment keep shifting. As we look toward 2024, there are positive and challenging aspects to consider. While mortgage rates have recently declined, hovering around 6.69%, experts like Jim Tobin, CEO of the National Association of Home Builders, predict even lower rates in the coming months. This potential shift may unlock opportunities for buyers. However, deciding to wait or purchase a home should not solely hinge on interest rates. Jim Tobin encourages potential buyers, especially first-time homebuyers, to be able to handle the challenge of higher down payments. Government programs offer low or zero down payment options, aiming to assist new homebuyers in realizing their homeownership dreams. So, if you intend to buy a home and still have some questions, or do you have a different opinion of how the housing market will unfold in 2024? Share your thoughts in the comments section. I would love to hear from you. See you in the next video.